So starting at the beginning, I was thinking of running this webinar, and I wanted to do it as a Q&A, and the two questions I got were actually from the chat that's not online yet, and one question was really about the indicators and what they're like, and then the next question was where to take profit, or where to put stops, or whether to run trailing stops. And the next question was, which assets do you consider to be good assets to trade? So what I've done is I've created two videos today that attempt to answer that question. And with that in mind, I'd like to play those videos, and if you have any questions as we go along, I'll pause the video, and all being well, this will all just work seamlessly. And then we can just see where it takes us. Is that okay with you guys? So try that. So I'll pop that up. So here we go. Here's a video, full screen, and we're now in full screen. The resolution should sharpen up, I'm assuming. And how do I play it? I click on it. This video is simply to give you a quick overview of my indicators. That's no good. Okay. And how you might interpret them. Where's the volume control? Okay, stop that here for a minute. Go. With trading, always the biggest problem you've got is to know which direction to trade and how to make money. So this is really interesting. It's pretty obvious, how that works. There you have it. See, I've got the other volumes up as far as this chart, which is the pound dollar 30-minute chart. So you can see here it says 30-minute chart. Was travelling overnight. This is midnight. So this is the volume of mine up as far as it'll go. It's playing it through YouTube. And you can see that these support. So I'm learning here that the resolution isn't that great at the moment, but maybe own indicators on here. They're called the Darvas support and resistance. In the meantime, if you just listen and then ask questions if you like at any time, and I'll stop it. This level here, caused by that. So the resistance is there, drops down a bit, drops down a bit, and drops down a bit. Okay, so we're going down. So that's the first thought we've got in our minds. Then the second thought we've got in our minds, we've got a low here, a low, a low. We're going up. We've broken that uptrend and we're pulling back. Now sometimes with a pullback, what you're interested in is the pullback, so then you can go long. So let's look at this a bit more. It pulled back down to there, and then it came back up to here. So we can see this is a potential long move. We've now got a higher low than this one, and the Darvas lines are getting squeezed into here with a potential higher low, but we still have a lower high at this point. What else can we see on here? We can see that if we come down to this level here, this is the bull bear butterfly. Yes. No, let's wonder whether we get, if we get team viewer going, we can actually get writing on the screen, and that would be much more interesting. So let's just pause this, get team viewer going as well, see if the bandwidth will handle it, and then we'll take it from there, shall we? Because I know then you can point and you can see, I can see where you're pointing. So I'm going to, Peter, you good shout. Cheers, Dave. Right, there we go, Dave. Okay, I'm with you again.
Brilliant, thank you. So, what I can hear you saying about so here there being a pullback. Is that right? From here to up here.
So, do you want to draw on that screen? I can't quite see where you are.
Oh, okay. So you still don't have to.
No, I need you to use the pen and then scribble with the pen.
Okay. So you were saying that there was this I guess the start of the pullback up here, yeah?
Yeah. What I was saying was that that I'll get my pen going again, if it will work. What I was saying is that we've got this low there and then another low there. These lines here are part of my indicators, and they're called the Darvas indicators, support and resistance, and they're based on the work of Darvas. So and you can see that basically that we've got an interesting thing going on here. We're basically going up as indicated by the lows going up, and then we've got the highs moving up, but now we've got a lower high and a slightly lower high again, so we're going into a squeeze. Out of that squeeze we drop out of this through the lower support line, Darvas support line, and we come back down again. Okay, so that's where we are with it. And then we've got a new low there, and then now a higher low there. Yeah. So that's really what I was saying, and I was saying that when we're looking for a trade, we're looking to trade with the trend. And if you look at the bull bear butterfly line, which we can't see on the video very clearly on this YouTube copy of it, it's been going up like that to represent, well, basically it's a model of what's going on here, and then pulling back down again. But we're above this dotted line, which is the zero line. And when you're above the zero line, you're looking for bull trades. Which is why I was looking for a bull trade here. Okay, so even though we've gone up and then we're coming down at this, and then here we're pretty much going sideways, I'm looking for an up trade because of the bull bear butterfly line. So then we're basically waiting for a trade alert which would give us the break. And the main trade alert that we got to give a possible break was this one here. Given that we're already long here. So that would be an entry alert there or an entry alert there to go long, if it breaks out above. Okay, so just like here we had another one which said if we break out above there, but it didn't, so we wouldn't be in the trade because it just pulled back down again. Yeah? But here was a candle which wasn't very convincing, but the next candle was more convincing, and we've got all of the ducks lined up in a row. So I'll play the video again now if I can make it do that, and you can see if the video still makes sense. I'll clear the lines off the screen again now, if that's all right, and then try playing the video, see how we get on. Area, and this code here that allows us to see what values we've got. Now roughly at this level here we've got a value of 8.36 or so on the bull bear butterfly on this candle there. We can see we've pulled down below the green line into this what I call the butterfly zone, and we're beginning to pull back out of the butterfly zone, as you can see here, beginning to lift up. So that's a good sign. We're looking for a bull trade according to the bull bear butterfly, and we're pulling back out of the butterfly zone. Now we look at this litmus test, which is the next indicator down here. That's been down and it's pulling back up again. It hasn't gone fully bull until it does. Hey gents, that audio quality is saying that we are, isn't it? In a partial trend upwards. So that's a good sign as well.
I'm going to see if I can improve it by going direct off my hard drive rather than going through YouTube.
My other question is, doesn't TeamViewer have its own audio?
I think it does, Dave. Do you know how to make it work? I've tried it a few times and it's not sort of played games with me, but we could try it.
Well, you can try the hard drive. Yes,
But you are right. It should be better to do it all through TeamViewer rather than have two applications running. Let's see if this will work. It should work better this now. Let me just play it straight off the hard drive.
CATO 30-minute trading and FX Profit Lab.
Better definition anyway.
This video is simply to give you a quick overview of my indicators and how you might interpret them. Okay, here we go. With trading, always the biggest problem you've got is to know which direction to trade and how to make money. It's pretty obvious, but there you have it. This chart, which is the pound-dollar 30-minute chart, so you can see here it says 30 minutes.
This little bit's going to repeat more or less what I've just said.
Was travelling overnight. This is midnight our time, UK time, GMT. And you can see that these support and resistance Darvas lines, these are my own indicators on here, they're called the Darvas support and resistance lines. What we've got is a resistance at this level here caused by that, so the resistance is there, drops down a bit, and drops down a bit. Okay, so we're going down. So that's the first thought we've got in our minds. Then the second thought we've got in our minds, we've got a low here, a low, we're going up. We've broken that uptrend and we're pulling back. Now sometimes with a pullback, what you're interested in is the pullback, so then you can go long. So let's look at this a bit more. It pulled back down to there and then it came back up to here. So we can see this is a potential long move. We've now got a higher low than this one. And the Darvas lines are getting squeezed into here with a potential higher low. But we still have a lower high at this point. What else can we see on here? We can see that if we come down to this level here, this is the bull bear butterfly area, and this code here that allows us to see what values we've got. Now, roughly at this level here, we've got a value of 8.36 or so on the bull bear butterfly on this candle there. We can see we've pulled down below the green line into this what I call the butterfly zone, and we're beginning to pull back out of the butterfly zone, as you can see here, beginning to lift up. So that's a good sign. We're looking for a bull trade according to the bull bear butterfly, and we're pulling back out of the butterfly zone. Now we look at this litmus test, which is the next indicator down here. That's been down and it's pulling back up again. It hasn't gone fully bull until it does this point here, but here it's saying that we are in a partial trend upwards. So that's a good sign as well. Now I come down to this indicator, which is the MTrader 3 indicator, and we can see that that's just ticked up from below. It's come up, it's saying we're bull. And we can see the next one below it, which is the MTrader indicator, is ticked up and saying we're bull. And the one below that, which is the STrader indicator, is ticked up and said we're bull. So basically we've got everything saying we're going long at this point. And this is 7:30 candle, so that means at 8 o'clock in the morning is when we're talking about. That's exactly the time the volatility starts to increase. These are the volatility bars along the bottom, and you can see overnight they were down and then they began to pick up, and the next candle was a big push. Now if you're trading that, you would not have got that big candle until after this, of course, so you'd only see the right hand edge effectively. So let me show you what you'd see if you were trading that. Let me just move this across a bit here. Can we slide that along? And See if I can.
Yes, I can hear you.
Get it. There you are. So what you would have seen on this screen at this time would have been this structure, this formation. So we've got more or less a sideways consolidation.
Okay, so let's see what happens if I bring it back a bit.
This is 7:30 candle, so that means at 8 o'clock in the morning is when we're talking about. That's exactly the time
Can you hear
the volatility starts to increase. These are the volatility bars along the bottom. And you can see overnight they were down, and then they began to pick up, and the next candle was a big push. Now if you're trading that, you would not have got that big candle until after this, of course. So you'd only see the right hand edge effectively. So let me show you what you'd see if you were trading that. Let me just move this across a bit here. Can we just slide that along and see if I can get it? There you are. So what you would have seen on this screen at this time would have been this structure, this formation. So we've got more or less a sideways consolidation, up, a sideways consolidation, down, a sideways consolidation. This sideways consolidation happened after the overnight period, because that's the midnight from GMT point of view. And the bull bear butterfly has gone up above the green line, saying we're looking for long trades. We got the pullback with the potential move to the upside again. Why would we think that? Well, this consolidation zone is higher than this consolidation zone, and all the indicators are now saying we're good to go. So let's have a look and see what that is actually like on the alerts. Let's bring these alerts across. These alerts are the alerts that came from the pound dollar, as you can see here, on the 30-minute. And for this account size is about, I can't remember, it's about 7,500 or something like that. It's saying that if you're going to risk 0.9%, and I'll show you the details of how I work that out in a minute, but basically let's see if we can get some understanding of that. The pound dollar 30-minute M trader and M trader 3, two of those kicked off at the same time, saying buy 0.68. So that's 6 minis, nearly 7 minis. It says enter at 1.2513. So what does that mean? 1.2513 is there. So that closed at this point here. It says if it breaks above this level here, get in on the trade going long with 0.68, that's 6 minis or 7 minis, at 1.2513. Put the stop at 1.2503. So 1.2503 is there. Okay, so that on this particular asset is a 10 pip stop. That's all we're talking about. 10 pips is the risk. And it's saying that we're targeting T1, T2, T3, T4, T5. All of those are the targets at different levels. I suggest you always target something like T3 or T4, because that will give you a reasonable risk-reward ratio. It's telling us the spread at this time was 1 pip, and it says the trading range at this time was 9 pips. So that's a very good inherent reward to risk ratio, and this is this value here. It says it's 9. Basically anything over 3.5 to 4 is pretty good. When you get up into the 9s and beyonds, you're doing very well. The reward at target 2 is 0.8. That just creeps into the bounds of being acceptable. And then the litmus test is +1. That is a partial trend, and the bull bear butterfly is 8.13. So that's not into a fully bull mode, but it's at the top end of the butterfly zone. So all's looking pretty good there. If you take that trade there, at that exact point there, with the stop here, let me just mark those on, see if I can do that. Put the stop on at somewhere around there. Let's put that, correct it, 2503. There, that's the stop. And our entry was here at 1.25. 1.2513, didn't we have? That's right, there you are, 1.2513. So that's our entry price. And our target for T3 or T4 is 1.2528. So let's put the T4 on. 1.2528 is around there. So there we have it, exactly correct. So that would be our target at T4, and we may be able to get T5. Well, we know with looking back at it that actually that's what we've achieved. However, let's just scroll sideways on here and see. We blew straight through that, absolutely creamed it right the way up through there. The total number of pips we made on that move was potentially 49.50 pips with 6 minis. So that's works out at $6 or £6 a pip. 50 points, $300, £300, something like that, out of that trade. If you targeted it just there, well, then you would have got a total of 15 pips, so 15 times 6, which works out at around 90. So still not bad for not very much time. The way I tend to trade these is to get the stop in, and when the price has moved up, move the stop to break even, potentially trail the stop. Quite often I trail the stop, and the trail on the stop would be roughly the same as the TR is 9, so a 9 pip trail behind that, and that would have actually taken it right the way up from this level here all the way up to there, which would be 59 pips. Then it would have retraced it back down to there somewhere, and allowing for the bid offer spread, and maybe about 48 pips or something like that. So that's basically what I would have been doing trading this particular asset, pound dollar. Let me just show you the indicators then. I'll bring them up. I'll pick up they're all based on the same idea. So let's go and have a look at the M Trader, because the M Trader was the one that kicked off. Bring that in over here so you can see it. M Trader, on this particular occasion, I've got it set up to give me alerts. That's true, give me alerts. Do I want to see any failed alerts? No, I don't want to see them. That's just noise, and I'll ignore that. Do I want the candle to be a high probability candle? I'm saying at the moment I don't mind, so that's false. But I could say I do mind, in which case that would be true. Do I want reward probability to be strong? And I've said I don't mind. I want to actually look at the alerts and make my own decisions. My risk percent is 0.9%. Now that's a whole complete conversation about risk management, and as you know, my particular preference is to risk only 0.9%, because that puts the maths in my favour. That's a completely other story, and I'll tell you about that another time if you like. On this settings I've got the bull bear butterfly minimum of 0. That's basically above the 0 line. That's anything that is a tall bullet I want to know about. And the litmus min, I was saying I want it on counter trend. I could change that to be partial trend, which is actually what this alert was, a partial trend alert. But for this moment I'm just saying I want to see everything. And then if I wanted to, I can push the alerts out to my mobile, and I can also push it out as an email, and I can prefix the email comment with 30mt space hyphen. That means I can filter it out of my emails much easier. So that's really how you set it all up. And all of these indicators, the lower three, the M traders and the S trader indicators, can be adjusted to give you the alerts that only you are interested in. This makes it very powerful and very flexible to set it up exactly for the trades that you want to take. So yes, there we have it. And that trade would have given you a very, very good return. That was the pound dollar today. So the next question might be, what other trades could we have taken today? So I just picked up a chart of the pound yen, and here's the pound yen chart, and you can see again, if we look at this
is what you got
candle
into,
here,
Pete, wasn't
that
it?
is the 7:30 candle again. Let me just move this out of the way so we can see it properly. There we have it. So no, that's the 7 o'clock candle this morning. That means the 7:30 trade alert. And here again, if you look at the structure of it all, we can see on this particular candle the bull bear butterfly was above the green line. So we've been going sideways, but this is telling us that we're above it and we're looking for long trades very clearly. The Darvas support and resistance we got here, we got a low, a higher low, a lower low, then a higher low, higher low, higher low. Definitely moving upwards. The resistance line is getting pushed, so that's definitely strong. Everything's in our favor. We get the alerts down here. Let me put that across there. You can see the alerts. The bull bear butterfly is above the green line. The litmus test is right, completely bull. The M Trader 3 is completely bull. The M Trader is completely bull. The S Trader is just giving us another long trade alert here. It should have given us the entry. There's our particular entry of that. Again, we would have got something like 60 pips potentially out of it, with a trailing stop of about 10 pips, 12 pips, maybe max.
It blew straight past T5. In fact,
trading range, if I pull this down here, the trading range is this particular thing here.
It's impressive.
The trading range is 14. So the stop would be a maximum of 14 on this. Personally, I would trade it with a tighter stop than the trading range on this, so that would make it maybe 10 or 11 or something like that. Enter on that candle, 11 pip stop, that would have been fine, wouldn't have got hit. 73 pip target, profit up there. Trailing stop 76, coming back down there, so 60 something or other. You could have made 60 pips, something like that. So that's another example trade based on my CATO algorithms and indicators. So there you go, that's it, that's the thing. Now the question is, what questions have you got? Yeah, what questions have you got?
There you go, guys, what questions have you got? Okay. You can't find that particular trade alert. Yeah. So were you trading the 30-minute or were you trading the tighter time frame? I'll see if I can find it.
So, what's to do that, John? Is that your indicators that that you've developed?
Yes, that's correct. Yeah.
Okay.
So yes, that's right, Dave. These are the indicators I developed to help trade.
Okay. Yes, that particular one looks very interesting, and I mean, is that something that's by the sounds of it, there was two opportunities there in quite a relatively small time frame. Is that typical?
Yes, absolutely. I'll show you over here. If I bring up, if I bring up this, which is my MetaTrader terminal at the moment. This happens to be the Dow, which is a trade I took, and this is on the 30-minute. So here we have there at 14:30 candles, that's 3 o'clock. There was a trade alert, and
okay.
If we go down here, we can see we got the trade alert on the 60-minute and on the 30-minute at the same time. And the trade alert on the 30-minute, which are these ones here, I've got a whole pile of them because I've got a few extra alerts going on here. But the ones we're most interested in are these ones. Those are the ones that I'm delivering. So we've got 3 trade alerts kicked off at the same time. at 3 o'clock.
Okay.
That is just there. Okay, so
right, yes.
that one, that one, that one, that one, and we're above the 0 line, and we're right up there, just about breaking out of there. It's giving us a 6.63 on the BBB, and then going through the notation. If I show you here, basically what it's saying is there the US 30 minute, the S trader and the M trader and the M trader 3 are all buy. This is here it's 0.38, which is 3 minis or 4 minis, and I traded it with 3 minis. So I truncated it basically. I took the integer value of that.
Okay.
And therefore traded it with 3 minis. I entered at 20093, which is very slightly above the close here, somewhere around there. And a stop of 20075, and the stop of 20075 is somewhere around here.
Okay. Yep.
So pretty much that's the trade I put on it. And then I was setting myself a target of up in this zone here, the T5, T4 zone. That was what I was initially aiming for. It says at that time when it first flagged the alert, the spread was 2, and the TR, the trading range, at the time was 14. So I put a trailing stop on it of slightly bigger than that, actually. I put a 16 pip trailing stop on it.
Okay.
Okay. The IR, the risk-reward ratio, the inherent risk-reward ratio is 7, so that's quite good. The R2 value is 1.22, so that's pretty good. Litmus is fully bull, and the bull-bear butterfly is coming up out of the butterfly zone. So basically I took that trade and I took it off there. And that's just because the way I was trading it, I'd set myself a target actually of lower than that. My top target was 20145, which was around here.
Okay.
Okay, and it pushed through to this sort of level here, and when it got to that level, I think that was 1600. If I bring if I go back to this crosshairs, where are we? There. See, that's the 1530 candle, so that's 4 o'clock. So wrongly in this case, I took the trade off at that level there, and so I did 63 pips.
Okay.
At £3 a point, roughly on a 7,000 account. So that was around whatever, about 180 pound.
Yeah, brilliant.
180 pound on a 7,000 account works out at something just a bit over 2% return.
So did you only get out because of the target you'd set?
Yeah, I got
Waiting
out
for it
because of the
to-
target.
yeah.
If I'd left
Right.
the trailing stop on it, just left it alone, which with hindsight, of course, great stuff, I obviously should have done. So with hindsight, I should have taken it. It would have went to 102 pips. Now with the trailing stop which I had on it was 16. 102 less than 16 would be what, 86. So with hindsight, I would have got it out around there with 84, 85 pips, something like that.
Yeah, but you got out of a great place anyway.
So I got out there perfectly happy. I've got no complaints with making over 2% on that period of time, which was what, 2 hours, no less than that. That's it. Half an hour. Just a bit over an hour.
Okay.
2%, and if I make 2% in a week, frankly, and you compound that up, that's up to something like 160, 170% a year.
Yeah.
So, got no complaints with that.
Okay. And how reliable is that setup, would you say?
I think what you have to do is train yourself to understand this sort of thing. But whenever you get this kind of setup, the probabilities are very high. The guarantee is obviously not there. You know, it could just as easily hit that resistance level and come back down. Yeah, there's
Yeah.
You don't know that. There's no way of telling. So nobody can tell you for sure whether it's going to reject that breakout or whether it's going to go. Having said that, if you look at the structure, especially with the Darvas lines, with the bull bear butterfly, with the litmus, you know, we've got this is kicking up over the top, we've got that at the top, we've got that at the top, we've got that at the top, we've got the trade alerts over here, here and here. They're all setting up. You can see that from the Darvas point of view, the support is rising. So is the resistance is rising. We've got this big strong bull candle. Everything inside there is taking place within that strong candle in a rising move. So yeah, high probability. Yeah, the setup's great.
Yeah.
I didn't expect it to go that far. When I got there, I was perfectly happy.
Yes.
You know, if I...
Would it have been more...
Sorry, Pete?
Would it have been more prudent to set your stop on that Darvas support?
The first stop on the Darvas?
Yeah, there, yeah.
Okay, that's a really good question. And let me just bring the pen on again. Okay, so the entry arguably is as we break the Darvas. That's always quite a nice thing to have. If it pushes up against the Darvas resistance line, at the same time you get all the alerts, that's really strong. You're quite right that if it rejected that, then the support level is the lower Darvas line. I'm always very aggressive with this sort of setup. And the reason I'm aggressive is because I believe that if it's going to go, it's going to go. When you get the setup like this, you're looking at a trade that is set up. It's saying basically, we've got bull power come in here now. You know, so if that's true, and not always, of course, but if it is true, then it's basically going to go on the next candle, and it's going to start making its move up. If it comes back, it means it's not going. So I put my stop basically exactly where I have it on here. All right, which is a much tighter stop. This is 9375. So the initial stop is 18 pips.
Yeah.
Yeah. Which means that if I'm wrong, I'm out again at this level, because it's pulling back, and therefore the whole premise that I've got this bull move starting is wrong. So I might as well be out of it and sit there and wait and see what happens next.
Yeah.
And if I do that, I can trade a larger trade size. If I put my stop here, then I get the cursor up again.
Yeah. You have to reduce your trade size.
What I have to do then is bring the crosshair across. Can't do it very well, but you'd have to have the trade size across that level there. So that would be increasing the stop by nearly twice as much. So your trade size would have to reduce from the 3.8 minis down to 2.
Yeah.
So let's say when you hit the same target, you end up with less money.
It's just that, I mean, it's happened to us all, but markets can get manipulated, can't they? And
oh yeah,
sometimes they do that. They do that on purpose. So,
yeah. But I always take the view, Pete, that when you get the setup for this thrust, then if it doesn't follow through, then the setup isn't going to follow through in that way.
Right. Yeah.
You know. Does that make sense?
Absolutely. Yeah.
Because this way I've ended up making over 2% out of that one trade.
Yeah.
Because I could afford to put more onto the trade. But if I'd got the stop down there, I'd have had to put less onto the trade.
True.
To stay within my risk management criterion.
Yeah. That trade this morning was very similar. In fact, everything was going for it, and it didn't go anywhere near its stop actually.
No, that's right. On that pound yen, great trade.
Yeah, yeah.
I happened to miss that. I was concentrating on this one and on the DAX. So I took an early morning DAX trade, which didn't make me a lot, but it made me about 0.7% of my capital. So today I've probably made nearly 3% on the capital out of those two trades.
Question then. So on the alerts that you get, are they could they be across various assets, or is it you select monitor and then the alerts will come against those if there's something to trade? Is that how it works? Or
yeah, I'll explain, Dave. Let's just move this down a bit now because we don't really need it there anymore. I'll clear all the writing off the screen as well, so we've got a clear screen. Let's clear that all off and just move this down a bit out the way. On my screen at the moment, I've got all of these different pairs up and things like that. So that's gold. I've got the DAX, I've got the FTSE, the Dow, the S&P, the Nasdaq, the French CAC, the CAD yen, pound yen, and I've got a number of different templates I've got set up. So that would be for the zero, and then if I click on that, you can see basically this is the screen I've got for that one. And so any asset that you've got on your desktop on this profile, anything you've got on there, you can set up with your own choice of settings for the alerts based on the settings up here. So I'll bring this down.
Okay.
If it will come, there we go. So on my indicators, so I can set up any one of these, the MTrader 3, the MTrader or the S-Trader, and they can all be different if I want. And then I can edit those up and say this is what I want to know about.
Okay.
Okay. And so having done that, all of those things are running in the background, and every time any one of these occurs, like for example here, you'd have got a trade alert on that candle, and then you'd have got another one on that candle, and this is the one we were just talking about.
Yeah.
And then we come along here, we get another long there on that one, so we've got a smaller trade there, and then we've got another one if it breaks above here, which actually it did, but then it came back down and would have taken us out on the stop.
Okay.
Yeah, this one here, we would have got a trade alert long, we would have got in on the trade on the next candle around that level there, we would have gone up. If we'd had the trailing stop, it would have taken us out at this sort of level around here.
Yeah.
Then it pulled all the way back, and then we got another bull push there, and that candle would have generated another alert at this point, so we'd take that trade. and that's a 35 pip trade. Let's say we got a 12 or 13 pip trailing stop, so you know you'd get taken out again with 17 pips. So if you set a target at this sort of level, then you just get taken out on the target. So it's a balance about, you know, what are you going to do? You're going to put targets on. Well, I always put a target on. Am I going to put a trailing stop on? Most of the time I put a trailing stop on. I want to get break even, so that I've got no further risk once I've got to that point.
Yes.
And then if I've got a target, if the target is something which would be very, very useful. So let's take this one here. 14.30, so that would be 3 o'clock. 3 o'clock on the pound yen. So come here, bring that down. 3 o'clock on the pound yen. Oops. What have we got? Have we got a pound yen in this lot here? 3 o'clock, should have. My computer's just decided to go slow, of course. We should have a pound yen in there somewhere. There's a dollar yen trade as well. DAX. The dollar Swiss. Everything's kicking off at 3 o'clock. The euro dollar. There's too many, you couldn't get them all. There we go, pound yen.
Pound yen.
Yep.
Okay, so there's the pound yen trade that we've just been talking about. And that said, on this particular account size, you trade 0.15, enter at 15152, stop at 14106. So that's quite a big one because it's a big candle. So our entry is about here, and the stop is way down here someplace. Alright, so it's that far. The stop was a long way away on that one because it's a big candle.
On that candle you were just pointing to, John, did it go down before it went up?
This one? No.
Yeah.
No.
Did it go?
No. This one here, it.
Yeah.
So here, if you follow that, it comes down after this. That's a down candle. That's a bear candle. It opens there, comes down, comes all the way up, closes there. Got the trade alert there.
Yeah. Yeah.
The next move is up.
Yeah.
Right. So again, the premise that you're always looking for the fact that you're saying, right, we're going. And if it doesn't, then you're out. So this one here, which was 13.30, that would be 2 o'clock pound yen. 2 o'clock pound yen would be down here somewhere. Did I say 2 o'clock? Do I mean that? I don't mean that. That's 13.30, it's 2 o'clock.
Yes, yeah.
So let's see what we can do. 2 o'clock. Have we got a pound yen, 2 o'clock? There's a 2 o'clock pound yen trade, okay? So we got the trade alert on that saying trade 2.9 minis at 141.31 with a stop at 141.078. T1 14141. So if we had taken that one, we would not have hit T1. We would have been in on the trade. It would have gone up and then pulled back and taken us out at our stop. So we would have lost 0.9% of our capital. If we had a trailing stop, we would have lost something like 0.5% of our capital, at a guess, looking at that. Yeah. So then we'd be out, and that's that. If we had put the stop on the lower Garbas, we would still get taken out, but just further down. So that's why I like to be aggressive with it. If I'm going to get out, I might as well just get out. Okay, and then the next candle, we get another trade alert long, and then that one gave us 35 pips, or the potential for 35 pips. Does that make sense?
Yep.
Now with the pound, it's you want to try and trade currencies that match onto the the session times. Okay, and the pound and the yen maps onto the European London session and the Asian session. So here
it might be an obvious question, but why is that?
It's because people in Britain like trading pounds and people in Asia like trading yens, and people in America don't care too much about pounds or yens.
Ah, okay.
So, you know, roughly speaking, oversimplifying, but there's a certain amount of truth to that, you'll find. And therefore the trade in the morning that we were looking at earlier is a higher probability of the follow through. Yeah.
Yeah.
So there you go. So that's how it works. And basically, you know, whatever you've got on the screen is what you've got happening. I've got overload really with stuff here. It's just too much going on. You can't do it all, can you? I mean, look at this. This is all of these are all trade alerts that have been happening, and there's just far too many, isn't there?
It's a big number.
It's a huge number, and so what you need to do really is set them up so that they're the assets you're interested in trading, and set them up so they're the highest probability that fits your own trading style. So this sort of thing, if you set it up, say, okay, I like this kind of setup. What was happening at that time? So I'm going to start filtering it out. So anything that fits that, I want to know about. Anything that doesn't fit that, don't bother to tell me.
Yeah.
And then you're going to miss trades, definitely. The stuff you're going to definitely miss because you've filtered stuff out, and you said don't bother to tell me. But that doesn't matter. You only need one trade like that a week, and you're done.
Yeah.
You know, if that one trade gives you 2%, which it did, and that's all you make in the week, you know, that's something like 9 or 10% in the month. You know, that's 10% in the month is 10 times as much as you get in the bank in 10 years.
Yeah.
You know, it's crazy, really. It's crazy how little you get in the bank, but it's also crazy how much, with a little bit of discipline, or quite a lot of discipline, you can do out of doing this sort of stuff.
Yeah. So would you recommend for somebody like me who's really going just to pick a setup like this and stick to it, and then with a few assets and just monitor and wait?
Yeah.
What's the
Yeah, absolutely. I mean, the best thing to do, really, though it feels like you're doing not much, is to restrict it down to a very few assets, probably 3 or something.
Okay.
And become good at understanding how they behave, become good at understanding how these setups work with them, because I find very often this sort of setup, when you see it appear, when you look at this, we've got that setting up there, and it's just breaking above the 9 line on the bull bear butterfly. The litmus test is up, that's up, and we've got the trade to say we're going. You know, and then that trade is 7 o'clock candle, so at 7:30 in the morning. It's just as the volume is starting to come into the market. You know, the people that got into work early in the markets, they're all there sitting in front of their things. They say, right, go to that one.
Okay.
I find it quite interesting as well that if you can catch those early session moves, it's easier than trying to catch these ones where you get more noise happening.
Okay, so time's a factor as well in that as to when.
Yeah, and
you should be. Yeah.
That's absolutely right, Dave. And you'll find that if you just pick, let's say you just pick the pound yen, the dollar yen, I don't know, maybe the Aussie dollar or the Aussie yen, or the pound Aussie, something like that. If you just pick a few, and then set up the indicators basically on the default that I deliver it with, then the trades will just get alerted to you. You won't get all that big long list. The reason I have that big long list is so that if I'm talking to you or somebody else, usually I can find the alert that would have been triggered at that time.
Sure, yeah.
And therefore we can have a conversation around it rather than saying, well, it would have done this. I can actually show, well, it actually did do this.
Okay.
Yeah.
That's good.
So anyway, so there you go. I think we're running out of time where I am. So I've probably got a lot more I could tell you about as well. But any questions?
No, all right, John.
Yeah, I mean that was really useful for me, and it's that was well explained, useful. Yeah, I'm interested in talking to you about obviously the indicators and so on.
So in terms of delivering the indicators, I deliver them so you trade them manually.
Okay.
That way you have discretion about whether or not you actually take the trade alert or not, because they're a suggestion. They're not a promise. But obviously
no, of course,
can't be a promise. All they can do is say, look, here, this is what's going on. Here's a probability.
Yeah, makes sense.
Yeah.
Well, you got MetaTrader, Dave?
I have, yes.
Wow.
So that's another question. Which flavour of MetaTrader are the indicators built for?
This is for MT4.
Okay.
So as it says about in here, I don't know. This is an IG MT4.
Okay. Yeah.
Okay.
Yeah. I've installed the latest version. Was it 5 the latest version? But yeah, I can switch to 4.
Yeah.
What do you use, Peter? Do you use 4 as well?
I'm on 4, yeah.
Okay.
And the indicators are reasonably easy to insert. Well, they are. Now they are, yeah.
Okay, yeah. So yeah, like I said, it's interesting. So the indicators then are these indicators for just this, or are there other types of indicators? How does that work, John?
When you say just this, you mean just this as in just MT4?
No, this particular setup is that this indicator?
Yeah,
so is it a set of indicators?
These indicators are set up to give you alerts when effectively the bull power and so on changes direction. So it's the algorithm goes and analyzes the price action, and then tells me here's a possible setup. So let's have a look at these here, okay? What you can do with them is, if I click out a bit here, you can see going back in time what the setup is. Okay,
right. Yeah.
So it's coming all the way down and then turning around, going all the way back up again. And you can see the bull bear butterfly line coming down through the butterfly zone. This is the indecision zone, and then this is largely bearish all the way through here. Okay.
Yeah.
Now, sometimes, as you can see in this case, we're going up and then we come back down again. So here's where we get a counter trend reversal. So in this zone here we get a counter trend reversal.
Yeah.
Okay, and I wrote the indicators so that you can trend trade with more success, or basically so I can trend trade with more success. You know, but what you can do, if you're of that mind and if it suits your style, then you can decide that what you want to do is trade everything opposite. Okay, so
go short.
So
yeah.
Here we're going up. If you're the kind of person that likes the uptrend, the consolidation, and then the drop, then this would be here. That would be when the bull bear butterfly is high.
Yes.
Okay, so then if you're into reversal trading, if I just switch that off there, Neil's typing to me over there, see what's happening. So where are we in here?
John, Dave, I've got to go now, I'm afraid, yeah.
Nice talking to you, Peter.
Okay then, Dave, yeah. Cheers now.
Yeah, good to meet you.
Yeah.
See you again.
Yeah, I hope you're getting involved with it. It's really good, yeah.
Thank you.
Cheers now.
Cheers, all right. I guess that is the question, John. So how do you obtain the indicators and what's...
Just a minute, I'll just...
Yeah.
Okay. So if I take this, I've clicked that off. Let's just zoom into this chart a bit. Okay, so this is the area we're looking at. On the 30-minute chart, we're pulling up here. Okay, and the bull bear butterfly has gone above the zero line here, so it's basically saying we're looking for long trades in this zone here. But if you're looking for the reversal, you're looking to catch, say, that one there, coming down. So Litmus has gone bear, M trader 3 is bear, M trader's bear, S trader's bear, everything down, even though the bull bear butterfly is long. And we've got this zone of consolidation through here, and then we've got this trade coming down. Alright, so let's get the pen on. So what we've been observing is this sort of thing here. And if you're a reversal trader, you're thinking, well, I'm looking for the reversal, then you'd be looking for any of the short alerts off of any of these.
Yes.
And here we get the first decent short alert going down, and it's got them all going down. And what we quite like about that, arguably, and the same with here actually, that's another opportunity which it might have put you in and it might not. Okay?
Okay.
But this one here would have put you in. What's quite nice about this is, just going back to the conversation we were just having about the pound yen. So the pound yen we want to trade on the European session and the Asian session.
Okay, yeah.
This is midnight, that dotted line through the middle there.
Ah, okay, yeah.
That's midnight. So this is the beginning of the Asian session, about there.
Right, okay. So again, it's
the beginning of the Asian session's there. It pulls down, it comes up, it consolidates, and it goes again. So in the Asian session, what we've got is this structure.
Right, yes.
All right?
Yeah, I understand, yeah.
So if that's what we're anticipating, we can set these trade indicator alerts up to say, I want these whenever they're all in agreement with, say, Litmus, but I don't actually care what it is on the bull bear butterfly.
Right. Yeah.
And then you'll get a trade alert for that particular situation. And then you could say, well, I'm particularly interested, the way I like to trade the M trader, that's the yellow line.
Yeah.
Okay, so arguably you'd say that, or you might say I want to trade S trader, that's the red line. So you'd pay more attention maybe to one of those than another. You might switch off alerts on some of them, you might keep them on. So as you study a particular asset, and as you get the feeling of it, you go, okay, what I've noticed with this particular asset and my style of trading is that I want to trade the gold line.
Oh, really? Okay.
Yeah?
Yeah.
So every time the gold one tells me something, I want to do it. So here's the gold one telling me something, here it's telling me something, here it's telling me something. Yeah? So going back to this, and the crosshairs on that, the first one we get is there, which it may or may not have put us in the trade. It may or may not have taken us out of the trade, depending on the stop. It was really close. Then the next one we get, it puts us in the trade. We make money out of that one.
Sure, yeah.
Then this one here, it's saying, drop us in if it drops below there. Well, it didn't, so we didn't even get in the trade, so that doesn't matter. And this one here says, get in if it drops below this level here. It does, so we make money on that one. This one here says, get in if it drops below there, so it did, and we make money on that one. So there's some we make money on, some we don't, but on this, basically on this, we've made money on pretty much all of them, except for...
Sure, yeah.
Except for maybe that one.
Right.
That one there, that first little one. But this one we did.
Yes, yes.
This one we didn't, because we didn't get put in on the trade.
We didn't get in,
This one we did, and this one we did. So that's a good result.
Yeah.
Four trades, three made money, one didn't.
Yeah. And do you trade in that way on the short side as well, or do you stick to the
currency pair can do anything, so it doesn't matter. There's no real. The currency pair is the relationship between the pound and the yen. So the idea of short and long is essentially exactly the same.
Yes. Yes.
Right? Unlike
in favour of one over the other. Yeah.
Like that.
Yeah.
Or commodities. Stocks and commodities behave differently, and therefore indices behave differently. But, but currency doesn't. Currency tends to be fairly even-handed. You can go long or short, and it's going to be roughly the same.
Yeah. Okay. So, question: Did the other guy manage to connect?
No,
and then
he didn't.
Final question is, oh, okay.
No, he didn't.
And so, before I run away, then is how do we get hold of these indicators? Then what's the what's the cost of it?
Yeah, I'll look up the cost. Basically, the cost is going to be something like £92 a month.
Right.
And then it's a monthly subscription, and just pay me while you're making money, basically.
Okay. And so what does that give you then? That gives you this setup, and then you kind of just sit and watch that, and then this gives you these Darvas support and resistance lines. So everything on the screen basically.
Everything on the screen is what you get for it, and then you can set up the different things here, and you can ask me questions anytime with Skype and TeamViewer and stuff. And my only interest in terms of doing that is to make sure that you actually make money, or you understand what's going on, and we have proper conversations about anything that you want to have a talk about.
And that's the other thing. I think that's kind of, for me, missing is that having that conversation and saying, well, this is what I can see, and this for me has been useful this evening. just to be able to see something and talk it through. It's good.
Yeah, brilliant, Dave. I'm pleased.
Okay. I need to run away, but I'll email you, I think, or give you a call. You around over the next day or so?
Yeah, sure, absolutely.
Yeah. Okay. Yeah. All right. Okay.
Okay. Brilliant.
Thank you very much. That was good.
It's a pleasure.